What are you expecting ahead? By the way, I'm told there's an election in 36 days.
Is it just 36 days, Sully? It feels like it's going to be any moment at this point. But you make a great point, right? We've had this downdraft in terms of the market and then this rip higher in the last, to call it, day and a half of trading. And a lot of people are asking the question, what is the real trend? I don't think we can ascertain a real trend from these last 2 days or even from the last 4 weeks. There was a lot of consolidation and profit-taking, rotation in terms of participation over the last couple of weeks. The big point here and the big message for investors is that there's always volatility before an election, and particularly in a year like this where we have so many cross currents between the virus, questions around economic activity, relationships and foreign relationships with other countries. There's so much for an investor, whether it be retail or institutional, to take in, that you should expect some volatility going into year end. Now, the good news is this volatility can provide amazing opportunities to increase the size of positions in industries and in sectors where you feel like you're going to be able to, own the secular winners, companies with earnings moats that are digitally transformed, and that really have the ability to grow their revenue regardless of the economic cycle.
Well, I tell you what, Joe, it's easy to forget, but in the 15 or so months heading into the 2016 election, the market, as you remember, did squat. I mean, literally, we're like, well, the Dow's up 4 points today. The market just did nothing for the better part of a year. Why the increased volatility this time around?
Well, I think it's a collection of macro conditions that are impacting the market. I agree with Kate. Yes, it's a lot about the uncertainty surrounding the election, but I also think it's the increase in Chinese-U.S. trade tensions. Let's not forget rising virus cases both in India and the UK, and also the impact from the fixed income market as it relates to where rates might go. So I think it's a collection of these macro headwinds that are impacting the market. Yes, today is a very broad-based rally. I believe 95% of the S&P 500 is higher. That's a very strong number, probably the best number we've had since December of 2018. I think within the Dow itself, there's only two stocks, Merck and Walmart, that are lower for the day. But there's been a 4-week slide, as you indicated, Brian, from 35.88 down to 32.09 on last Thursday. That's a 10.5% slide. And I think how investors now have to be thinking about that is that looking forward, you're still going to have the volatility. So maybe most of the price damage has been done. And now it's about a little bit of we've got to mark some time into the earnings season to really see if we're going to be able to have a V snapback and go back and challenge that 35.88 again. I don't think we do. I think we trade here between 32.75 and 34.25. And I think the VIX being higher on a day where the market is so strong is kind of indicative of that. And I'm sure Pete will explain to us the reasoning behind why we see this higher VIX today.
Well, that's it. It is higher, okay, Pete. So I feel like the VIX is the Minnesota Vikings. They're kind of good, and every time you think they're going to break out, they do something dumb, and now they're 0-3. And the VIX is kind of like that, right? It's up. It's at 27. It's not at 12, but it's not acting like we're going to have this major contested election and huge volatility. It's not at 40. How do we read this sort of weird level for the VIX?
Well, I think you have to go back to the fact that everybody loves to talk about the VIX, and Joe understands this very well, that he doesn't have this thought. But I'm telling you, so many people think that the VIX is the fear index. It is not the fear index. It is a measurement of expectations going forward. But where were we? What kind of movement have we had? We had that monster move on Friday, right? We had 360 points. We went off the lows. We accelerated to the upside. The velocity was unbelievable across the board, whether it was NASDAQ or Dow or whatever. Today, same sort of a reaction, although we're seeing the Dow very much outpace right now, at least the NASDAQ. So a nice, big, powerful move. We were up 500-plus points. That gives you close to a 2% move. You know what a 2% move is on the VIX? It's about 32. So the fact that we've moved up a little bit says to me that the volatility is there. It's increasing because the movement that we are seeing warrants that increased volatility. And so I think that my recommendation would be you use that volatility when you can. In other words, oftentimes we talk about different ways to trade the markets. When the volatility is higher, I tend to be a person who's more apt to be buying stocks and selling premium. And at other times, when the volatility is low, that's when you're buying more and more call options and put options and using that to your advantage. So just keep an eye on it. 27, we start to break out a little bit. We were over 30 twice last week, 2 different occasions. So it's not like we can't possibly go over 30 again. We absolutely can. We could even go a little bit higher. But it's all about, you guys are talking about the macro. The macro is huge because it is about the virus. It's also about the vaccine. It's also about the elections. It's all of the above. So there are a lot of different factors playing in right now to the markets.